Welcome to Profile Traders. This is Reza and this is our market analysis for November the 3rd. As you all know, tomorrow we have a major election in the United States. It's going to be our midterm election, and the results will be extraordinarily important for the market because it will set the tone of how things will proceed moving into the future. Therefore, the fact that today was very much so non-eventful is an indication that by Wednesday we should start to see significant increase in volatility, as money will have and will be forced to readjust itself to new life as a result of these coming elections. Therefore, you should expect a lot of random in and out of capital, in and out of the market, and the moves can become wild and violent and kind of rhythmless. So extreme caution moving into Wednesday. As of right now, until 2002 holds, nothing negative is done on ES. The only thing that is a little bit negative today is when today, as we try to exit out of 2016, we failed and we came back and closed way into it, or inside of it. So this brief exit out of 2016 was very brief and short-lived, and the fact that we came and closed well into it, right now it can be considered as a failed break. But for this failed break to really gather momentum on the downside, we need to break 2002. Once we break 2002, there should be pretty much zero resistance, or I should say zero support, all the way to 1993. And then past 1993, we are dealing with 86.5 as our support. So these are our three lines of support, and resistance becomes now today's high. After that, nobody knows, because it's going to be another new high. But it will all be dependent of the results of our elections and what we will see tomorrow night, and most importantly Wednesday morning. As for crude, another very violent, brutal day. We got a very nasty push down in the morning, a complete total reversal back up, then again another failure back to the low of the day, and finally a late day break to the downside, which caught every single one long that had their stops position below 79.5. What is causing all this? It's very clear. I have explained it several times. It's the fact that OPEC is disappearing, if not already disappeared. Every single of those nations that belong to OPEC are selling oil under the price that they have dictated for each other, because they all need money. On the other hand, you have millions and millions of barrels that are sold even at $15, $20 a barrel by the murderers and criminals of ISIS, by other generals, rogue generals, by the Russians, by the Azerbaijanis, you name it. They're lined up to sell you oil way below the market. As price keeps on coming down, nobody needs to buy contract to hedge against moving price to the upside. So You combine all these things with a strong dollar in the same time, it creates the kind of chaos you are seeing in this market. So as of right now, it's in a severe breakdown. 79.5 was a clear benchmark not to break. So now as long as we remain below 79.52, we should see further downward. Be also prepared that the result of this drop might create and should create tremendous pressure to hedge funds that are heavily long. Many will go out of business as a result of this. And once they are going to be forced to liquidate, I will not be surprised to see significantly more pressure to the downside. Now, if it stops here and returns back above 79.5, that may be the cause that this was a late session event on the downside and market did not have time to respond, and it was a one-time seller that got liquidated, and now that is done with his business, market goes back up. But obviously it's not the case yet, and as long as we remain below 79.5, we should definitely expect further and further weakness to come in. When will we see the turnaround and when will we see the bottom? We will not see that until we get a clear rejection of one of these levels on the way down, which we haven't seen yet. Therefore, market is still in the state of direction, and when the market is in a state of direction, try not to fight it, especially in a violent, brutal market like crude, because it will put you out of business. So any attempt of a rally close to 79.5 is a sell, and if it doesn't even rally and there is further collapse tonight, I don't know what kind of a reaction and panic it will create. So this market is definitely in a huge amount of trouble as it is. As for gold, after the massacre that we saw the other day, which it dropped from 1202 down to 1166, this is just nothing but a bearish pose. We have seen yet zero rush to buy it on the way up, even though that if it has stabilized, the stabilization down here is not long enough to conclude that it's support coming in. The closes are in the middle of the range, or in case of today at the bottom of the range. Doesn't look good at all. So expect further collapse below 1160. But if we do hold 1160 and come up clear at 1175, then it increases the chances to go towards 1185 and then eventually reach back up towards 1195 to 1200. You ask me, it's unjustified. But again, who am I? When the Federal Reserve has the balls to come and lie to people that inflation is at 2%, and you have enough manipulation money that want to destroy this asset to the cheapest possible so that they can accumulate it, the combination of the two doesn't create a favorable atmosphere for gold. And at the same time, this casino paper crap is at all-time high day after day after day. So people are like, why should we hold this? Let's dump it all and go buy Priceline. Priceline, that toilet paper at 1200, it's a better deal than an ounce of gold at 1170, I guess. So why not sell our gold and go buy that toilet paper with a stamp of Priceline on it at 1200? Makes a lot of sense, people, but it is what it is. We all know what greed, stupidity leads us all, but history repeats itself here again. For euro, pretty much the same as gold. I mean, the carnage continues. Mr. Draghi, the drag queen, has the great idea to now become Mr. Ben Bernanke, little mini-me monkey, and imitate and copy what Ben Bernanke did, which is 6 years of QE, $13 trillion that he spent supposedly to create inflation and to increase the job market. Neither nor has been achieved. According to Madam, the chairman of the Federal Reserve, Mrs. Jeanette, inflation is nowhere to be found and the job market is still weak. So somebody should ask them, you bunch of insanes, if you have done it for 6 years and it didn't work, why do you want to continue to do it now in Europe? Mr. Draghi, drag queen, you drag out of the cabaret of Italy. Stop this nonsense and realize that it will do nothing to your economy nor change anything in business in Europe if you print and print and print and devaluate your currency. So let's see what happens here, but nothing constructive has been done. It's the same weakness, weakness, weakness. Short term, we have a little bit of a break up above 25.15. If we do hit that, possibly we are going to come towards 1.2550. Above that, we should go delete these single A's and then reach a level of resistance at 25.88. On the way down, I can't tell you what reaction we will get upon another breakdown below 24.42. So bracketed up above 25.14 for a break up, and below 24.42 possibly next round number to shoot for is going to be 1.20 even. It's a sad story, but we should all thank Mr. Draghi. Again, this is Reza with profiletraders.com. Thank you for listening.